Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Tuesday, May 7th, 2024. Next week we have CPI and PPI data coming out. This week there isn't really any data that can rock markets. If anything interesting does happen this week, it will be because of earnings or perhaps some big news event outside of financial markets. We'll start with the S&P 500, the daily chart, each candle representing one day. Today we had a doji pattern which kissed this trend line here that I had before as part of wedge. I thought it was a wedge that broke out lower and was going to continue down. It still looks bearish as a pattern for stocks. However, things are starting to turn. First of all, we have the VIX, the VIX. This tracks the amount of fear priced into options contracts, and this is still breaking down. I had talked about there being a trend line here, and I thought after this big move here we'd hit it and maybe bounce up from here. But instead we broke down and we're continuing lower. It seems there is very low fear in stocks, and it's actually going lower. Not only in the VIX, but we're seeing legitimate strength in the HYT. This was very unexpected for me. Unfortunately, I noticed there was a really big smudge on my crystal ball from last week when I had last few weeks that I've been making these readings, and I wiped it off. Now I can see more clearly. There's no fear here. The smart money is, they're not worried about defaults. They're not worried about bankruptcy. This will support the equities market. Now, can it be so that the equities market heads lower and then the high yield corporate follows? That can happen. When stock valuations go down, it does put more risk on companies. It puts more pressure on financial markets. So, if this could be one of those times where that's how it happens, and maybe it will happen that way, but I can't short here. I had been talking about like maybe I'm going to short the S&P 500 or the Qs again or the semiconductors. I can't do it. Not with HYT here, not with the VIX here. It's just there's too much strength here. I'm not seeing the fear. Certainly one of the things supporting markets is our yields right now. Not only are Fed funds futures looking slightly more dovish today. I didn't go over that chart. You can check it out yourself. It's a slight move, nothing groundbreaking, but we have had the 10-year yield backing off here. When rates are going higher, it does put more strain on businesses because rates have to go up across, for everybody. And when this goes down, it allows companies to refinance, allows companies to borrow money at slightly lower rates, and so maybe this is really what's doing it. The rates going down here are partly, I believe, because of a lot of earnings coming out being not being weaker, but more of the guidance moving forward being weaker. Companies are basically coming out and saying, hey, guys, we're not going to be making, 10 times as much money every year for the next 20 years. I'm exaggerating a little, but that's essentially what I think is going on here. Going back to the 10-year yield, 10-year treasury yield, take a look at this trend line here. We have hit it 1, 2, 3, 4, according to great chartists. Every time you hit it, it gets a little weaker. Is this the time it's going to break down lower? In my crystal ball, I said yes. I said I think that for various reasons, when I just combine everything that I know and that I see around going on with markets, I think this is the time we do break this trend line and go lower in yields. And yes, that can have that can have a stimulatory effect in stocks. Stock valuations are allowed to go up, until they're not, until it begins the other way. Sometimes when yields go down, stocks go up, but sometimes when yields are going down and stocks go down at the same time because people are selling out of their stocks and they're buying into the treasuries, sending the treasuries even lower, the yields even lower, sending the price of the treasuries higher. The run to safety, the guaranteed returns that you can get from the government. So I'm still sticking to my call that this was a top in yields here, and I think this is it. I think we're going to break this trend line here and go significantly lower. I think this is the end. I actually uh, put I went 1% in TMF today, which is in addition to the 46% of my portfolio I have in ZROZ, a long duration treasury fund similar to TLT. The TMF is a triple leveraged version of that. And so for every percent that treasuries go up, this goes up by 3%. Again, not advice of any kind. It's just me and my crystal ball. One other thing I wanted to bring up regarding the 10-year treasury yield is that if I double this trend line here and I just grab it and lift it up, parallel trend lines, I got to admit, Gareth Soloway got me on this, and it is amazing what you can figure out here as far as trend lines go. And as you can see, we've been in a very obvious channel now for a while, and I think this is the time. I think this is the time we break lower here, but we'll see. Supporting the bearish view on stocks for the moment is the Fear and Greed Index on CNN Business. I do like to keep good track of this, and while some parts of this indicator still are in greed, stock price strength is in extreme fear. It's worth reading through this website, by the way, on your own to look at all of these indicators and how they work. It's very good. And we have fear and stock price breadth, put and call options showing fear, and safe haven demand in extreme fear. This is one of the more interesting ones. Safe havens being bonds, especially treasury bonds, which is what I'm loaded up on when it's in extreme fear mode. That's what I love. Ideally, you want to buy stocks when stocks are in extreme fear, and if safe havens are in extreme fear right now, I'm not all in. I'm almost 50% in with a leverage portion today. I practically have a 50% exposure to long treasury bonds right now. Last chart I want to mention is URA. This is uranium. This is a market I've been following. We had a new high intraday for this market. And again, I want to reiterate the RSI here is not showing the same kind of strength. This is a divergence. I think this is a fake breakout, and I do think this is set to go lower. Maybe breaking very much lower and giving another opportunity to buy into uranium. That's all I have for you for today's show. Hope you enjoyed, and thank you for watching. Robschild.